Question number 8. Question number 8. Sri Singar maintains columnar petty cash book on the impressed system. The impressed amount is 500. Impressed amount. From the following information, show how his petty cash book would appear for the week ended 12th September 2024. So you have to understand what is called impressed system. Every period beginning, the main cashier gives some money to the petty cashier. So we have two cashiers, cashier and petty cashier. Cashier takes over the control of all the big spending, large spending. Petty cashier will be carrying about small spendings, petty spendings, right? Petty things like tea expenses, auto charges, small amounts spent for the station and all. And usually the main cashier will order him to spend up to this much of amount without my consent you can spend. That's all. If the value being say 500 rupees for every spending, you can take care of. Beyond that, get back to me, I will take care of that. Those small spending will be prepared by petty cashier. Like a cash book, the petty cash book also will appear this way, receipts and payment. Receipts and payment. Apart from that, the payment will be classified by using some additional columns. That's why it is called analytical petty cash book. If you have only receipts and payment, that will be called petty cash book. All the payments, usually there will not be any receipts. The main receipt is nothing but the receipts from the cashier, main cashier. Okay, we get the cash only from the main cashier. Say 1000 rupees. That 1000 rupees can be used by the petty cashier for spending various small spending like postage, telegram, telephone, and stationery, printing, and photocopy, and whatever it may be, he spends for that. Okay. See, out of 1000 rupees, they have spent around 870 by the month. 130 is the balance. Next period, the balance being 130. 130. Okay. 1000 rupees, he gets it from the cashier and he spends for small expenses out of the 1000 for that period. Maybe the period may be a week or a month. A week or a month. So if it is a week, in the week first, the first of the week, that amount may be given by the cashier to the petty cashier. That will be 1000 rupees. That 1000 rupees or 2000 rupees or 5000 rupees, a number is fixed. That number is called impressed amount. That is called impressed amount. Clear? So the cashier says, every period beginning, I will give you 5000 rupees. You spend all the petty expenses out of the 5000 rupees. By the end of the month or for the period, after deducting any spending, what's the balance you have, you tell me. Again, I will make it equivalent to the impressed amount. What is the impressed amount? 500. Now, sorry, 1000. In this case, we assume that impressed amount being 1000. Now we have only 130. The petty cashier has only 130. The shortage being 870. 870 will be given by the cashier to the petty cashier. Okay, when? The day 1 of the period. Day 1 of the period. January month. January 1, he says that I have 130. Then you take another 870. So now the petty cashier has 1000 rupees in January 1. Again, for the entire January month, he starts spending a lot of things. And by the month end, he says that sir, 830 spent for various purpose, and balance being 170. This is for January. This is for December. And February, again he says, sir, I have balance 170. 170. Okay, this is the next period. Immediately cashier says you have only 170. You have to make it equal to the impressed amount. The impressed amount being 1000. How much is shortage here? 830. So again this 830 is given. So he spends that month after month. This is how the impressed system is appearing. But apart from that, these expenses for every period will be in repetitive nature. And we ask him, tell me the reason for this spending. 870 you spend, okay. 830 you spend okay. For what are the purposes you have spent this 870, sir? Wait, sir, I'll prepare some additional columns also for that. It may be for printing, it may be for stationery, it may be for postage. So he is selecting those items related to the printing and posting here. That's how. And he identifies what is the amount he spent for the posting, postages, stationery, printing, and all individually. So he gives me a small summary for what are the items meant for this 870. Maybe printing 125 rupees, repairs, postage, auto charges. He prepares small columns, a column for each and every spending and grouping all those expenses and gives me a statement for what are the reasons this 870 is spent. This is called analytical because we are analyzing the spending, no? That's why it is called analytical petty cash book. So if you think over this one, this is called petty cash book. By including these extra columns, then it becomes analytical petty cash book. And this impressed system means so where impressed amount is fixed, that amount will be always maintained in the first day of the period. It may be a week or fortnight or a month. The month beginning, this amount should be there. From that amount, he starts spending. Is that clear? This is called impressed system. Let's try to solve this illustration now. Question number 8. First, I will finish up the petty cash book and then I will move on to the analytical petty cash book. Now, you know that we have only one receipt. You have only one receipt. Is that okay? Now, so this one is debit side. This one is payment side, credit side, or receipt side and payment side. Petty cash book. Petty cash book. Okay. Clear? This will be description. Clear? You don't have the description for the debit side and credit side. It will be a common description column because in the debit side we have only one receipts, which is the amount received from the cashier, main cashier. So we usually don't have that. Now I'll just start posting all these items. All these items. Yeah. Let's start with this date. 7/9/24. Okay. Or September 24. September 24. 7th date. Balance in hand. Balance. Okay. It should be debit side. To balance brought down. The value being 134.10. Received cash reimbursement. Okay, 90. Okay, 134.90. Received cash reimbursement to make up the interest. How much? 365.10. Receipt side. Bank. Or cash. From the main cashier. Then there's a payment, stationery, by. Only these two are the debit items. Rest will be the credit items. So by stationery. By stationery. This value being 49.80. And on 8th, miscellaneous expenses is there. By miscellaneous expenses. This value being 20.90. 20.90. 99. Repairs. Repairs. The value being 156.70. And 10-9 traveling 68.50. 11-9 stationary 71.40. 12-9 miscellaneous expenses 6.30. On the same date repairs 48.30. Clear? We have posted everything. Now tally this. The total in this side is 500. The total in this side is 421.90. And tally this. You will get balance carried on. Balance carried on being 78.10. Is that clear? Then rewrite for the next date, probably the next date being 13th. 2 balance brought down. The value being 78.10. So next period, first date, immediately he reports this to the main cashier. Sir, out of 500, we spent 421.90. So only 78.10 is left over. Give me further money for this period. The shortage will be reimbursed to cash or bank. How much is the shortage? 421.90. The amount spent will be the shortage. This is called petty cash book. Immediately main cashier wants to know, you spent 421.90. Okay. For what are the reasons you spent? Wait, sir, I will give that details also further. Now, you can identify the reasons here. Okay. What are the reasons we have? Stationery, sir. 49.80 being for stationery. 49.80. This is for stationery. I am grouping this. Do I have any other stationery here also? 71.40. 2 stationaries are there. What is the total of stationery? Come on, tell me. Total of stationery being 121.20. 121.20. Next, we will move on to the miscellaneous expenses. Under that, 20.90. Here is 6.30. Only 2 miscellaneous expenses are there. This is around 68. 27.20. Right. Next one is all about repairs. We'll go for the repairs now. 156.70 and 48.30. The total repairs in this case being 205. After that, we have travel now. Stationery. So the last one being the travel. The value being 68.50. Total 68.50. Now you report this to the management or main cashier. Is that okay? Now, the total of this being 421.90. Is that clear? So now he gives the report. Sir, The total spending 421.90 is meant for these purposes. After this, your duty is to record what? This one into the main ledger book. How this will appear? Ledger. We have cash book and we have petty cash book. Okay, petty cash book if you want. Petty cash account. In cash book, initially the amount spent being this much in the payment side, here 2, here by money spent for the petty cash 365.10. Of course, petty cash account is not required because petty cash book resembles like petty cash account. Okay. Then stationery. The value should be in the debit side 121.20 to petty cash. Then miscellaneous expenses to petty cash 27.20. Repairs to petty cash 205. Travel to petty cash 68.50. Is that clear? Clear? And this is the previous year. This is the another one 421.90 petty cash. Here is one spending. Here is also one spending. If I consider only this one, then the 421.90 in the credit side is equal to the debit side of the stationery. Clear? That's how you can incorporate. Now let's move on to the next illustration. This is very simple one, right? It's very simple one. Now we'll try to solve the ninth illustration now. Ninth illustration is nothing but the repetition of the fourth illustration only. I'm going to solve this illustration. Earlier we solved using the journal entry, trial balance and all. Now I'm going to solve this using the practical accounting system. This one. Okay. Singer was carrying on business in book publication on 1st April 2024. His assets weighed. What we have to do? Okay. Now, I am going to prepare cash book and all. See here, cash book. And ledger. Okay. Maybe cash book. The two in triple column, cash book style. Triple column, cash book style. I think I may make it a simpler form here. Yeah. This one is for triple column cash book. This one is for triple column cash book. I need space, so I'm going to write everything in small font. If you have any trouble, message me so that I can make it bigger. Yeah. So, cash book. What are the predominant books we are going to prepare? Maybe sales book, purchase return and sales return and all. So I may open those ledger also here. Purchases book. And sales book. We have sales return book. Sales return book. No other books. No other books. Okay. And what we need to have? Journal proper. Journal proper. For recording the transactions which is not having the uh, format here, means could not be recorded in any of the subsidiary books. This will be receipt side and payment side. Discount allowed, receipt by way of cash or check, cash and bank. Here discount received, cash and bank. Let's now start posting everything. First one is all about opening. This is a journal entry only. The opening balance sheet could be in the form of journal entry only, which is opening journal entry. I'll start with this one now. Okay, this one. Yeah, come on, tell me how to post this. All the assets are going to be debited and liabilities and capitals are going to be credited. Now we have bank, cash, furniture, stock, due from Alex, maybe debtors and Beam debtors. These are the debtors item. He owed 1 lakh to Mrs. Singer and 26,000 Charan. All the liabilities should be in the credit side. So bank account debit. Bank account debit. This value being 35,000. Cash account debit. The value being 3,700. Furniture account debit. The value being 45,300. Stock, the value being 3,51,000. Alex, the value being 15,000. Beam, the value being 16,000. To Mrs. Singer loan, 1 lakh. To Charan, the value being 26,000. Find out the balance, if any, which is the capital. Debit minus credit. I think the value is 3,40,000 rupees. Clear? Opening journal entry will be the same way. Clear? Then next we'll move on to the transactions. I'll pick from 2nd to 4th April. These are the 3 transactions are going to be posted. I think we can post that in the subsidiary books. Paid wages and salaries by check. Wages and salaries by check. So, usually we start with the 2 balance brought down. Okay. So from the opening journal entry, we can post that bank and cash as the balance. So I have to post these 2 first of all. The rest of the account could be posted later on. First, let me finish up these 2. So bank and cash 35,000 and 3,700. Okay, we have cash 3,700. Bank 35,000. 3,700 and 35,000. Is that clear? Bank and cash over. Clear? Now paid wages and salaries by check. So wages and salaries, that too by way of check. So I post that value in the bank column, 6,000. Purchased on credit from Charan. Credit purchases should be in the purchases book. We purchased it from Charan, so I write the value in the name of Charan. 5 financial accounts books at rupees 500 each, then 2,500. Sold goods for cash to Mahesh. Cash transaction should be in the cash book. So receipt side here, sales, the value being 5,000 rupees. And drawn cash for private use. So then it is actually what? Drawings should be in the payment side. Drawings. We assume that drawings is from the cash book. So cash, 3,000 rupees. 5,000 cash is. Okay. So we have posted these 4 transactions. Quite a bit easier, right? Compared to the journal entry format. If it is receipts, post that value in the receipt side. In the case of payment, post the value in the payment side. So simple. Then we'll move on from 6th onwards, 6 to 10. Few more transactions. Majority transactions will fall in the receipts and payment itself. So half of the load is over because that one is pretty simple one, right? Now paid telephone bill. In the payment side, telephone bill. This value being 1,800 in the form of cash. Issued check in favor of Charan, 25,000. Discount allowed by him is 1,000. So we have issued payment side. The payment is made to Charan. By way of check payment, 25,000 rupees, we have received 1,000 rupees discount received. Discount received. Received a check from Beam in full settlement, 15,000 rupees. 15,500. Actually, the amount recoverable from Beam is 16, but we received 15,500 stating completely over. Means another 500 rupees maybe we offered discount. So Beam. Discount allowed 500 rupees and check 15,500. 15,500. Sold to Alex, sales. In credit. Credit means it should come in the sales book. It should not be in the cash book. So Alex, 10 cost accounts book at rupees 500 list price, 8% discount. So 500 into 10, 5,000 rupees, 8%, 400 rupees trade discount is subtracted. 4,600 will be the value. So 4,600. Is that clear? So up to 10th transactions we have completed. Clear. Now let's move on to the next one from 11th date onwards, 11th to 20th. 11th to 20th. Most of the transactions are in cash and bank itself. So our load is simple. Now, Beam check returned dishonored. So the check what we have received is now dishonored, should be posted the other side. So here Beam. This one should be other side. Clear. Clear. While posting that, you have to be very careful. So 15,500 is returned. 15,500 back. What about the 500? What about the 500? That is reversal of discount allowed. It's not discount received. You cannot post here. You cannot post it here. What you can do? What you can do? For that 500 rupees reversal of discount allowed can be general proper. Can be general proper. Listen, while receiving the check from Beam, what is journal entry? Bank account debit, discount allowed account debit to Beam. Is that okay? 15,500, 500, 16,000. You can post everything in the cash book. Cash book, no problem. We have done this. On dishonor, this entry is going to be reversed. Okay, Beam account debit to bank account to discount allowed 16,000, 15,500, 15,500. On receiving the check, we thought he has paid. Later on verification, we didn't get the money credited in our books because it's dishonored. Clear? This is the correct entry, but you can break this entry into two. Combined entry is going to be broken this way. Beam account debit to bank 15,500, 15,500. Beam account debit to discount allowed reversal 500, 500. Is that clear? So I have broken this into two journal entries. Two journal entries. This one is related to the bank, so it will go to the bank account, but this one is not related to the bank or cash book, or no other book is there to accommodate this entry. Am I right? We don't have any subsidiary books for this. If we don't have any subsidiary books for recording any transaction, you can simply pass a journal entry which is called journal proper. So I'm going to pass this entry here. So beam account debit to discount allowed. Discount allowed is expenses, should always be debited. When it is going to be credited? On reversal. So discount allowed, this value goes to the debit side only. This one will go to the debit side only. But if I put the value here, it means illogical, because this 500 is named as discount received. It's a we have the problem here. On reversal of discount allowed, it's better don't post that in the cash book, but post that in a journal proper form. So beam account debit to discount allowed, the value being 500. Clear? Clear? This is more logical way of posting. More logical way of posting. Clear? Any doubts? Clear? So then we'll move on to the next one. Sold to Arun on credit. This one is over. Second one is sold to Arun on credit 5 FM books. Sales. To whom? Arun. 5 FM books. So 600 into 5, 3,000 will be sales value. And cash sales to Anand. Anand is not required, only cash sales will be taken. So here sales, the value being 6,000. Cash sent to bank. For the bank, it's a receipt, the value being 5,000 rupees. For the cash, it is a payment. So here 5,000 rupees. Under cash, you need to name this being the bank. Under bank, you need to name this being the cash. Is that clear? Because in bank, there is a record of 5,000 rupees. If I question why do I get 5,000 rupees, it's nothing but cash deposit. The reason in the description. The reason in description. And then purchased one two-wheeler on credit from TVS and Co. 10,000 is paid by check. Then two-wheeler account, 10,000 by check. You can split that entry of payment into two. TVS two-wheeler account debit to TVS to bank. And you just break that entry into two. Payment entry separate, non-payment entry separate. The payment entry will go to the cash book. Non-payment entry will go to the journal proper. Let's see. I'm going to pass the journal entry here. What is that? Two-wheeler account debit to bank to the amount unpaid TVS and Co. So 35,000, 10,000 and 25,000. This combined entry can be broken. How? Two-wheeler account debit to bank, this value being 10,000, 10,000. Two-wheeler account debit to TVS 25, 25. This one will go to the cash book, and this one, of course, we don't have any other book to record. Then automatically we have to post that in the journal proper. What is journal entry here? Two-wheeler account debit to TVS. TVS is my creditor now, 25,000. Clear? Hope now you'll be able to understand these journal entries properly. No, 110,000 will come here. Two-wheeler. Okay. So you can pass this way. Or two-wheeler to TVS 3535. Then in the bank you have to again post this. Okay. Clear? The both the way may be accepted. Now what more? All the 20th transaction up to 20th April is over. So 20th April over. Now from 22nd onwards, okay. From here, I'll pick around 3 transactions here. 3 transactions. Beam declared insolvent and a dividend of 60% is received in cash from his estate. The amount recoverable from Beam is 16,000, where we received only 60% cash, 9,600. Balance becomes bad debt. Balance become bad debt. How much? 6,400. If you are receiving cash, then it may be posted in the cash book. But for related to the bad debt, of course, we cannot post in any of the subsidiary books. Then we have to pass journal entry for this. Journal entry for this. To the extent 9,600 received will be posted in the receipt side of the cash book. So 9,600. The amount received from B. To the extent of 6,400 rupees, it's a loss named as bad debt. I post that here. Bad debt account debit. Bad debt account debit to Beam. This value being 6,400. 6,400. Is that clear? Clear? So then what more? Old newspaper sold for cash. So we get the money here. Old newspaper sold. The value being 250 in cash. Old furniture sold 4,000 rupees cost but sold for 2,500. So the furniture cost being 4,000. Out of 4,000, 2,500 being in the form of cash. What about the remaining 1,500? Loss on sale. As this one is related to the cash, can be posted in the cash book. Receipt side, furniture account, the value being 2,500. To the extent of 1,500 we lost, can be posted as a journal proper. So here, loss on sale of furniture, loss on sale of furniture account debit to furniture account. This value being 1,500. 1,500. Is that clear? That's all. 1,500. Now, 27th. Right. I'll try to finish off 27th and 28th both. Yeah. So what happens here? Purchased from Kumar, 50 cost accounts books purchases from whom? Kumar, that too in credit. 50 cost accounts books at 220 each means 11,000 rupees in total. 50 into 220. Next, Arun returns one FM book. Then it is a sales return. Sales return by whom? Arun. You know that FM book cost us rupees 600. So I am going to reverse that here, 600 rupees. So we have posted 2 entries here, purchases as well as sales return both. Being in credit, I posted to the concerned subsidiary books. Received from Alex, check in full settlement 14,500 of the amount due on 1st April. 1st April, what is the due? We have 15,000 rupees. For that we have paid. Received from Alex, check in full settlement. So we have to receive 15,000 rupees. He has given me 14,500 rupees. So in receipt side of the bank account, bank column 14,500 should be here, and the difference, the amount actually receivable and received will be discount allowed. So it is for Alex. Send cash to bank. For the bank, it is a receipt. the value being 11,000 rupees. For cash, it may be the payment. Under cash, it should be named as bank. Under bank, it should be named as cash. Contra entry. Contra entry. Yeah, I can use a C term here. Contra, representing the other entry is the other side. You no need to again post further in any of the subsidiary books or ledger account you prepare later on. Okay, that's the meaning behind. So we have completed up to 28th date. 28th date. And the last one is 30th. I think these two are not related to the cash transaction, so we don't have any other options. We need to pass the journal entries only. Interest due to Mrs. Singer 9%. The Mrs. Singer, the amount is 1 lakh. For that 1 lakh, 9% will be the interest payable. That too for a month. So 1 by 12. So I think 750 is due. As we have not made any payment, as we don't have the receipts also, cannot be posted in any of the subsidiary books, we can pass the journal entry only here. So the journal entry in this case being interest is the expenses, so interest account debit to outstanding interest. This value being 750. Another one is goods are taken for domestic use. Of course, cannot be posted anywhere. So drawings account debit to purchases. Okay. So don't say we have already purchases books are. Purchases always be debited, but in this case purchase is credited, so cannot be posted in the purchases book. Clear? So 2 purchases. This is also journal proper purchases. This value being 500. Clear? Hope now you'll be able to understand the method of adapting practical system in the life. Clear? So if we don't have this method, we need to work a lengthy journal entry like right. Now I'm going to finish up this one. So what you have to do? In case of discount allowed and received, it should be tallied. 1,000 tallied. Is that okay? Discount allowed and discount received are tallied. Surprisingly, it got total, but it's not totaling. It's total, but it's not tallying. Rest of the thing, cash and bank should be tallied or balanced. Okay, if I balance the cash column, 27,050, and you get balance carried on being 6,250, and in this case bank 81,000. I think, am I right? 81,000, and balance carried on should be 24,500, and balance brought down. Rewrite here, balance brought down 6,250, 24,500, and purchases book total it up 13,500, sales book total it up 7,600, and sales return total it up 600 rupees. So we have prepared all the subsidiary books along with the journal proper. Now I'm going to prepare the ledger. Post these things to the ledger. The ledger, while posting to the ledger, we no need to prepare the cash account and bank account. Usually cash account and bank account are the lengthy one. Because of this method, the cash column as well as bank column acts as the cash account and bank account. We skip those two bigger ledger. So rest of the ledgers are small ledgers only. So let's see. Okay. Now I'm going to prepare all the ledgers here. Don't count the page. I will finish up faster. No need to worry. Yeah, I'm going to prepare the ledgers. Yes. I start with the furniture. From the opening journal entry, we can post to the concerned ledger either in the debit side or credit side as a balance brought down and brought down. Either it may be asset means balance brought down. In the case of liabilities or capital, it should be in the credit side. So furniture account. Furniture account. Balance brought down. The value being 45,300. Next one, stock. Balance brought down 3,51,000. Am I right? 3,51,000. Then Alex, balance brought down, value 15,000. Then Beam, the value 16,000. Balance brought down 16,000. And Mrs. Singer, the value being balance brought down 1 lakh. And then Charan 26,000. Balance brought down 26,000. And then capital 3,40,000. Balance brought down 3,40,000. Okay. We'll first finish up the remaining journal entries. Beam. 2 discount allowed 500. 500. And discount allowed 500. Discount allowed DA. Okay. Beam. How much is that? 500 rupees. Clear? Then two-wheeler. Two-wheeler. Okay. Two-wheeler 2 TVS 25,000 and TVS by two-wheeler 25,000. Is that okay? So we have posted these two. Now bad debt and B. Bad debt. In bad debt, to Beam 6,400. In Beam, bad debt 6,400. We have completed these two. Now loss on sale of furniture and furniture. Loss on sale of furniture. Loss on sale of furniture. Okay. To furniture, the value being 1,500. And another one is in furniture account. We already have the furniture account here. Loss on sale 1,500. We have posted these two. Is that clear? Then interest and outstanding interest account 750. Interest. Outstanding interest account 750. Outstanding interest account. Outstanding interest account. Here interest 750. Is that okay? Then we have drawings and purchases. So drawings and purchases. So I'll start with the drawings here and the purchases here. So drawings, here two purchases. In purchases, by drawings. The value being 500. Okay. So this is very familiar. Normal posting of ledger from the journal entry is similar. Now what happens? I have to record this one, these two. From the purchases book, how I am going to record? Okay. Total should be where? Debit side of the purchases account. So here sundries from purchases book 13,500. Then again okay, slow. Yeah. Once again. Yeah. So we have posted this one, and we have to post internal item to the concerned ledger. Kumar credit side. We don't have Kumar account as such. So I'm going to open Kumar account, new Kumar, and here purchases, by purchases. How much is that? 11,000. Apart from that, we have Charan. Charan account already we have, I think. Yeah. Here purchases 2,500. Clear? So we have posted the items available in the purchases book to the concerned ledger. In the previous class, we have seen how to post the things available in the purchases as well as sales book, as well as purchase and sales return book separately, and cash book also. In this illustration, we are going to consider everything collectively. Now, sales book. This 7,600 total will go to the sales account credit side. So, sales account credit side, sundries from sales book. What is the value? 7,600. Next, that internal items. Arun should go to the Arun account and Alex should go to the Alex account. In Alex account, debit side 4,600. Sales 4,600. And in Arun account, we don't have Arun account, right? So we have to open Arun account also. Here sales. What is the value to Arun? Sales value to Arun 3,000. So this is 3,000. Okay, Arun account. Clear? So with that, we have posted the sales book items also. Now I am going to post the sales return. This total will go to the sales return account debit side, and Arun will go to the credit side of that account. So I am posting both simultaneously. Sales return. Right. Here Arun value being 600. In Arun sales return, the value being 600 rupees. Sales return should have the debit balance, and the internal party's name will be the credit side. So I have posted all these items. Journal proper recorded, purchases book, sales return books recorded. Now I have to record the cash book items. Forget about the balance brought down because it is from here. from here. So we never bother about that one. We never bother about that one. Is that clear? Rest of this sales. Sales will be posted in the, if the items available in the cash book receipt side, means debit side, to the concerned account, it should go to the credit side. And what about the contra? It will not be posted anyway. The other record is available the other side. Every transaction will have equivalent double entry, debit and credit. We posted once here, the next year will be posted to the concerned account. But in case of cash withdrawn, deposited, both are appearing in the other opposite side. So we no need to post anything further. Sales 5,000 rupees. So we have sales here. Cash sales 5,000 rupees. Then beam 15,500 and 500 in beam account. In beam account, here, there in the debit side means here it should be credit side. So bank account 15,500 and discount allow 500. Then again we have sales 6,000. Here is sales, cash, the value being 6,000. Then beam 9,600. Here debit, it should be here in credit side, 9,600 cash. Then old newspaper, we don't have such an account. I'm going to open that. Old newspaper. Old newspaper. Cash, the value being 250. Credit side, there it was in debit side, here it should be in the credit side. Furniture account, already we have 2,500, should be in the credit side of furniture. So cash, sale 2,500. And Alex account, 14,500 bank and 500 discount allowed. Alex, already we have this. Bank 14,500. Another 500 being discount allowed. And discount allowed total will go to the discount allowed account debit side. So discount allowed account debit side. Sundries from cash book, the value being 1,000. The value being 1,000. And now in the payment side we have wages. You need to open a new account, wages here, 6,000 bank. So wages, there in credit side, here should be debit side. So bank 6,000. The value being 6,000. And then drawings 3,000. It is in the credit side. Now it should be posted in the debit side 3,000. Drawings, cash 3,000. Am I right? Is it 3,000 only? No. Yeah, 3,000. Telephone, a new account comes 1,800. So I'm going to open the telephone account. Telephone, cash 1,800. 1,800. Then we have Charan. Already we have Charan account, 25,000 bank and 1,000 discount received. Here it's in credit and it should go to the Charan's account's debit side. So bank here, Charan, bank 25,000. 25,000. Discount received 1,000. What more? We have beam 15,500 bank. Here credit and in beam it should be debit. Bank 15,500. Then two-wheeler 10,000 bank. Here debit side. There it was in credit, so here it should be debit side. And don't forget to post what? The total should go to the discount received credit side. I'll put the value here. Discount received. Okay. Discount received in the credit side. Sundries from subsidiary books or cash book, value being 1000. So I have posted everything clear. Now ledger posting should be posted to the subsidiary, means the trial balance. I'm going to prepare the trial balance now. Okay. Trial balance. Trial balance. Kumar shows which account? Kumar shows credit balance, the value being 11,000. Sales total, how much? 18,600. Am I right? 18,600. Balance carried on 18,600. Should be in the credit side. Balance brought down appears in the credit side, so it should be credit balance. We always verify whether the balance brought down is appearing the debit side or credit side. If it appears debit side, then it's a debit balance. Balance brought down, not the balance carried on. Arun case, 2,400 balance carried on. Balance brought down appears in the debit side. So Arun, this value being 2,400. Sales return debit balance 600. Old newspaper credit balance. Old newspaper credit balance 250. Wages 6,000. Debit balance. Telephone debit balance 1,800. So we have posted all these items. Now here we'll start with furniture. 45,300. 45,300. Balance carried on being 41,300. Am I right? So furniture debit balance 41,300. 41,300. And then stock single item debit side 3,51,000. Alex 19,600. 19,600. 4,600 being the balance carried on. Balance carried on. Okay, Alex 4,600 debit balance. Beam got tallied 32,000. And discount received credit balance 1,000. Discount received 1,000 rupees. Mrs. Singer credit balance 1 lakh. Mrs. Singer 1 lakh. Charan account 28,500. 28,500. 2,500 being the balance carried on. Charan. Okay. Credit side 2,500. Then capital we have only 3,40,000, that too in credit side. Capital 3,40,000 rupees. Discount allowed after reversal, it is only 500 rupees balance. Should be in the debit side. Discount allowed 500 rupees. Two-wheeler 35,000. 35,000. Balance carried on 35,000. Two-wheeler debit side 35,000. And then TVS 25,000 credit balance. And then bad debt 6,400 debit balance. Loss on sale 1,500 debit side. And then interest debit side 750. Outstanding interest credit side 750. Credit side 750. Drawings 3,500 in total. Okay. Debit balance 3,500. Balance brought down appears in the debit side. Purchases balance carried down 13,000 in the credit side. Brought down should be the debit side. So debit balance. Purchases 13,000. So we have posted everything except cash and bank balance. What is the cash balance here? 6,250 debit side and bank balance being 24,500. So that's all. We have posted all these things. Now you can total the trial balance. Hope the trial balance total being 4,99,100. 4,99,100. Is that clear? Are you able to understand?